Good morning, everybody. Welcome to today's game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, let's get right into the action. We got lots to cover today. Right off the bat, take a look at what the headlines are today. GDP was expected to be 2%. That was the forecast. Actual GDP comes in at 3.3%. Now, this is a big beat on GDP. Interestingly enough, the markets are not freaking out about it. They're mostly kind of saying, you know what? Generally, this might be a Goldilocks scenario. Maybe even if we weaken a little bit, GDP will come back to, let's say, 1%, which is still growth. So interesting there. We'll take a look at the Fed Watch tool and see what the Fed projections are for rate hikes or rate cuts coming up over the next few months. Next one, we have durable goods coming in at 0.0%. This might be why we saw no real reaction on the GDP number. That was less than forecast. Forecast was for 1.1% growth in durable goods orders. It came in at 0.0. Core did come in slightly better at 0.6% versus forecast at 0.2%. All right, as we go down, jobless claims. Jobless claims coming in, jumping 25,000, so 25,000 more people than last week filed for unemployment. And again, that was at 214,000. Estimates were for 200,000. And again, last week we had 189,000. So again, notice how the GDP was stronger than expected, but the other numbers are coming in weaker. And I think that's taking the bite out of the stronger than expected numbers, which generally, remember, if everything was stronger than expected, you'd see less chance of a rate cut and the markets would actually be falling. We are not seeing that. In fact, the markets have inched up off of this data today. All right, now we're getting into earnings, guys. Tesla tumbles. They basically said notably lower growth this year. Tesla stocks trading down 9% pre-market. The chart's been consolidating underneath support, signaling potential weakness into earnings. I want to actually go right into the chart here of Tesla. So let's go right into this, guys. So the one thing I wanted to show you in regards to this, so first of all, this is the pre-market action, right? So this was yesterday coming in here. This is the drop on earnings. It's continued to trade lower. We're right now trading right around $190 per share. Now, interestingly enough, if we flip over to the daily chart, look at what the daily chart was kind of signaling, right? If you look at, again, first of all, think about what the markets have done. All the other Magnificent Seven stocks are basically at all-time highs or close to all-time highs. This one was not. This one was trading in a wedge pattern from lows across here. But look at what happened just before earnings. We started to crack below this trend line right here and trade just below that level. And for multiple days, it was holding below that level, almost as if the market was telling us, the chart was telling us, you might see a dump on earnings. And sure enough, that's exactly what we have seen. Now, in terms of where this starts to get interesting for me, let's take a look at the chart. What I like to do is I like to look for technical levels below where we currently are trading. So right now we're trading around the 189 level, 190 level. That's all the way down here. I start to look and I start to say, okay, well, how do we go about this? Well, let's just do a Fibonacci retrace here. Let's take this low pivot here and draw a fib up there. And what we can see here is that we actually have an interesting level coming into sight. And let me just show that right here. There's my Fibonacci, right? So I'm taking the lowest point from 2023. This was January's low, 2023 at $100, basically $100. I'm stretching the fib up to the recent highs. So I'm looking at a retrace. And what I'm seeing here, guys, is that the 618, look at this. If we zoom in here, let's zoom in. The 618 coordinates with other levels. So basically, this is your 618 line right here, right? And it's basically, I think it's at 177. Yeah, just below 177. And the key here is what I'm looking for when I do my fibs is I'm looking to see which fib matches up with other technical pivot points on the chart. And in this case, what I can see here is that you have a little pivot top here, a low here, a low here, a low here, and it kind of goes right through there. So as a technician, that's now a level that I'm saying, okay, not only is it the Fibonacci 618 retrace level, but it's also a multi-pivot point that should signal some sort of support. So basically what we're looking for, at least what I'm looking for today, is if this dumps to 177, right? Somewhere in that 177 level, that's where I'm going to look to potentially pick up a little bit. Maybe as a day trade, in fact, very likely as a day trade. On a swing trade basis, I'm not so sure. I like a 3-day rule here, which is basically stay away from it, reevaluate after 3 days, see what is going on there. All right, we're going to go back to the headlines here, guys. Let's jump back to the headlines. What we can see here is Humana getting crushed today. This does not happen very often where you see a medical stock like this or an insurance stock getting slammed. But again, they're basically saying there's horrid guidance here for 2024. They're blaming surging Medicare costs. Humana stock is dropping 15%. Now, same thing. Let's jump right into the charts and take a look at Humana. So here's your chart on Humana. If we bring this up right here, look at that drop on earnings. Now, it is bouncing back a little bit in the lower range. But what's interesting, I put a trend line in here, which matches my daily level. Look at this. If we zoom out on the daily chart, there's a level down here that's very, very interesting to me. If you go back, and look at this. If you go back to 2018 to 2019, that high is right at around $340. Now, it did already touch that level. Now, for Humana, one of the things I'm noticing is, notice it was here, 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 and this would be kind of a retrace to a very, very big technical former major pivot high before it had this dip down here. And it took literally, you're basically talking a full year to get back above it. Then you had COVID, and then it went on its way. So this 340 level is interesting to me as a potential swing trading level. Granted, it is high risk as it is coming down on earnings, but it certainly is something that I'm going to pay attention to. So again, it already tagged it pre-market. Let's see if it comes back in. But 340 is an interesting technical level on the chart of Humana. But what a drop on Humana, guys. Again, you don't see that very often. All right. Just a few other earnings announcements today, guys. What we do have is we have American Airlines jumping on better than expected numbers. Basically, a lot of these airline stocks have been beaten down quite a bit. So again, that is getting a bid. Southwest Airlines is getting a bid. A lot of the airline stocks are getting a bid in sympathy to American Airlines as well as with their earnings out there. So again, nothing major there, though. I was looking at the chart earlier. It's not up enough to really note a major mover with a potential resistance for a short. IBM. Now, this is an interesting one. IBM jumping on better than expected earnings. The stock again, and the reason why I want to point this out, guys, is I look for gems like this. This is what I would call a hidden gem. Not that it's a hidden stock. I mean, everyone knows about IBM. But what I like to show you guys is just this, right? So, and again, let me flip to the intraday chart. So let's go to the intraday. So you can see right here, this is where earnings come out. It jumps from basically $173, $174, goes to almost $190, pulling back to about $186 right here. So one of the things that I look at, and by the way, I'm not chasing this, but I want to make a point here about looking for these hidden gems. So while everyone else is like, oh, I got to be in NVIDIA, I got to be in Microsoft, I got to be in, all the rest of these Magnificent Seven, Apple and Google and all these other ones, which, by the way, are so concentrated by investors and funds alike. These are the things that I look for. I look for stocks that usually are cyclical in terms of their mega moves and then they go to sleep. And you can see this in Apple. You can see this in a lot of stocks. They have periods where they kind of become out of favor, where other stocks take the lead, and eventually they reinvent their business to start to catch up. And what I like on this chart is that you could go back to 2013, and this stock is still not even back to those levels. Right? So think about this. While every other Magnificent Seven stock is up literally hundreds, if not thousands of percentage points, trusty IBM has just been going along, consolidating, and is now beginning to make that move up. They're beginning to show that they do have life again. So could this be the beginning of a bigger move to the upside? Could this be a place to maybe exit some of the Magnificent Seven and actually move into? I do think that's a possibility. Now, again, I'm not someone who will be playing this because of the gap up. I don't chase stocks. But let's say we open up here. Where's the 188? So somewhere up in this vicinity. So we're up in this general vicinity right up here, right? So somewhere in this vicinity. If we open here, and let's say we retrace back down in the coming months to, let's say, maybe somewhere in this level, like 150, heck yeah. A retrace to the scene of the crime would be very, very interesting to me as a kind of, in all fairness, a buy and hold potential candidate. All right, and again, the idea here is if at some point the market pulls back, which we don't know if it will, but if the market does pull back, maybe this does eventually pull back with the market, giving us an opportunity to buy something that, again, hasn't made a new all-time high in basically over 10 years at this point. So just an interesting little idea there. Again, that's how I roll, guys. I'm always thinking 3 steps ahead, essentially. I don't want to be someone who's chasing. Now, does that mean I sometimes don't get, the max gains on things? Yes, I'm okay with that. I want solid gains, continual gains, finding things at cheap levels, essentially the same as if I were to go to the shopping center or the mall. I'm not going there to buy the most expensive things that have just been jacked up in price. I'm looking for my jeans on sale. I'm looking for the shirts that are on sale that are good quality, that kind of thing, to pick that up. All right. In any case, let's continue on here. So just recently, in fact, last week, we had the SMH trading at about $185, $183 per share. Now, the SMH is the semiconductor ETF. And what I said to you guys, and I showed you this, I said there's a measured move that gives me a target of about 194 to 195. And the measured move is simply taking the bull run. So this is from the 2020 lows, COVID, to the 2020, basically the 2020, early 2022 highs, before that big corrective move down here, right? And then taking this low and using that same distance, so 111 points, that was the move up. The idea behind a measured move is that the measured move psychologically will repeat, and then when it gets here, the idea is it's going to have some psychological resistance. Investors somehow psychologically, we may not even realize, like I didn't realize that it was 111 points, oh my goodness, we're getting close, until I did the measurement. But naturally, investors tend to just subconsciously have this ingrained, right? Oh, this is where it dumped out after that type of move, had this huge correction, so maybe that could happen again. So you use your measured move right there, and yesterday we went up and we tagged that level very quickly. Amazing the run on the semis. Now, the semis are trading up today. We aren't taking out the highs yet from yesterday, but I'm watching like a hawk to see if this 195-ish area on a daily closing basis, do we kind of hold this general range? Now, to be fair, there's no guarantees. I mean, the way things are going, I've talked about the liquidity in the system. The government continues to spend. The Fed is looking to cut rates, which will push more liquidity in. There's always a chance we just continue to defy gravity. But as a technician, I look for things like this to give me maybe a slight edge considering how overbought the semis are at this point. You can look at AMD's stock chart. You can look at NVIDIA. You can look at, any of these. It's a dime a dozen. They're insane, these types of moves. All right. Speaking of which, Intel reports after the bell today. So that's going to be a very interesting one as well. All right. So that was the SMH chart I wanted to go over real quick. A couple other charts that we want to look at here, guys. I haven't looked at the 10-year yield in a little bit of time. I do want to show this today because look at this. So we had the GDP number that was better than expected. All right, we had the other numbers that were worse than expected. The market's choosing to go with the worst numbers as the bigger factors here. In other words, they're saying that yields are falling, and what that tells us is that they're thinking that the Fed is more likely, slightly more likely to cut rates like the market is expecting, and thus yields are reducing here. You can see that drop on the 10-minute chart. Now, if we go to the daily chart, we look at this, we're just retracing essentially what we went up yesterday. Now, we're still just chopping sideways. I still think there's a potential for us to go up to this level, 4.33%, but let's keep an eye on this. But again, yields pulling back, market generally goes higher. So let's watch again that today and see how it goes. Next up, if we go to the U.S. dollar chart, the U.S. dollar did get a little bit of a jump, but now it's coming in. If the dollar falls, markets also like that. So just keep an eye on these two little factors. Let's go to the S&P 500 or the spiders. You can see, look at the spiders, guys. This was, by the way, yesterday's reversal on the NASDAQ and the S&P was a worthy note. It doesn't make or break anything, but it's something that I did take note of. I talked about it in Trading the Close yesterday, which is at 3:55 p.m. I'll be on there today again live. But here was yesterday, right? We had this beautiful rally early in the day, and then the markets faded into the close. Look at this. We kind of were chopping sideways. That economic data comes out. We saw the 10-year yield drop. What does the market do? It jumps up like that. So you can see, again, markets are liking the fact that yields are falling. Free money is the drug that the markets want, and that's what we're seeing right here. All right? Now, if we go to our Qs chart, Qs the same thing, right? We're still seeing same thing. Look, same little move up. But notice, again, we're not at yesterday's highs on the Qs right there. That's a level that I'm going to be watching very closely right up here on the QQQ today. Do we get there? Do we close above it? Do we pierce it? Do we get rejected? That's something I'm going to watch. And the reason why I'm paying so close attention is not only did the measured move on the semis hit, which is needless to say, the semis are the driving force in the market, right? I mean, that's basically NVIDIA and then the rest of the group. Now, yeah, you could say, all right, well, what about, Apple and so forth? Yeah, those are important as well. But to be honest, the market, and this is a saying that's been used for decades, is that with where the semis go, the markets will follow. It's a great indicator for the markets and a leading indicator at that. So again, flipping over to the daily chart, this is why I'm watching today's high on the NASDAQ 100, is because this is a topping tail. So that again, and I don't know how clear it is for you guys to be seeing it here, but that again is what we would refer to as a reversal signal. Now again, can reversal signals be negated? Yeah, it happens all the time. But again, a slightly better than 50% chance that this could mean something today. That's what I'm watching for, and that's why I'm watching this high of the yesterday as a key level. Now let's talk about what negates a bottoming or topping tail. So let's draw it in. Here's a candle, right? And let's do it right like there. You get your bottoming tail, all right? So topping tail, excuse me. So we'll say that the chart was running up, and then that candle was put in. The way a topping tail is negated, which I'll be watching today, is if any candle afterwards ever closes above the tail. It has to close, so on that time frame. So you could have a topping tail on a 10-minute chart, 60-minute chart, daily, weekly, monthly. But ultimately, it's only negated if that time frame has a candle that closes above it. So if this is the daily chart, which it is, you would need a candle to close above yesterday's high, and then that factor is now negated. And that, as a technician, is very important to know, because right now, this topping tail is a dominant factor. That's a factor that appeared yesterday. It's a warning signal, potentially, that the market is in a topping point. If it gets negated, then it's done. It's negated, markets can march higher, the probabilities sway from expecting a pullback to now pushing higher again. So again, that's why when I talk about what I'm watching so keenly and closely, I'm watching today's or yesterday's high on the Qs. All right. Couple other things here I want to just quickly go over. In fact, let's follow me over there to this other screen, guys. Let's go all the way over here. Let's get right into some of these other things. Let's go to Bitcoin. We'll talk about Bitcoin and a few other cryptos. I know a lot of great comments coming out about how happy you guys are. I'm covering a few of the other cryptos per day. I'm going to try to do that as much as I can. Please understand, sometimes I run out of time, though. Bitcoin, almost no movement the last couple days. Now, I'm going to explain why this is a concern, okay? And again, this is just pure TA facts. It is what it is. And by the way, concern doesn't mean it's going to drop. It just gives you the probability to start to lean in that direction. When you have a fall like we've had and you start to go sideways, what it's doing is you're essentially, the buyers that are buying this dip are being sold into by other players. And that essentially eventually exhausts. If it keeps going sideways, the buyers that are buying the dip eventually all get filled on their positions. And essentially what you're creating here is a bear flag. Now, this is a very preliminary factor, right? Meaning that when you only have 2 or 3 candles sideways, it's what I call an immature bear flag. Immature bear flags have the lowest probability of success. Generally, I avoid them. But once you get to 5, 6, 7 candles sideways, that becomes a mature bear flag. The probabilities start to move more strongly in the bear flag camp that you're going to see a breakdown. So again, right now, it's nothing major. But again, the fact that we're not jumping back up tells you that the buyers that are buying the dip are being met with sellers. And this is all these ETFs that continue to buy Bitcoin. There's, whether it's GBTC still dumping on the market, whether it's other players, that's something to pay attention to. The other thing that I think has to be noted here is that I mentioned this the other day, I think it was last week, is that we know that historically major pivot tops in Bitcoin have been associated with big news events, right? 2017, the futures launched. That was the exact high on Bitcoin. In 2021, the first high was the IPO of Coinbase. Then we dumped to 30,000 from 65,000. The second one was the ETF for the futures that launched. That was the top at 69,000. So here we have another top potentially that coexists with a spot ETF. The other thing to note is that in those previous cycles, Bitcoin has led the stock market by 6 weeks, which I showed you just, I believe it was a few sessions ago, either earlier this week or late last week. So it is something I'm watching not only based on Bitcoin, but also in relation to the stock market. We're now into this top about, what, 3 weeks, 2 to 3 weeks, which means you probably have 2 to 3 weeks more that the market can do its thing before potentially I would start to expect a rollover. That's assuming Bitcoin doesn't jump back up into a bull mode. All right, quickly going to Cardano. We'll just cover Cardano. I covered this the other day, but I just want to show you guys again. Cardano continues to hold support right at this trend line here. So again, notice pivot low to pivot low, and it pierced, but it's holding. So right now, Cardano's holding this 46, 47 cent level. If that breaks, your target is 40 cents. 40 cents is going to be a mammoth support. Not to mean it doesn't break necessarily down the line, but at least look at that. Look at that baseline right there. That is going to be good support. Let's look at Solana. Solana, which is a new crowd favorite, obviously, what we can see here is we did break this upsloping trend line. So oftentimes when you break an upsloping trend line, you can have a retrace to the scene of the crime, which as we know would maybe be back to here. But at this level, if it can't get above, the next move you would expect would be down like that. So again, it's had a little bit of a move. We'll see if it even gets back to that level, but it needs to recapture this level right here, which is around, it looks like $98 to $100. If it can't recapture this level, the path of least resistance is to the downside right there. All right, let's go on to a couple others here. I do want to cover gold. Gold honestly has been sleeping of late. It is up a little bit today. I continue to remain very, very bullish on gold, both fundamentally and technically. Technically, we have the inverse head and shoulders, right? So if we look at the inverse head and shoulders here, we can clearly see, and there it is right there. We can see again, there's your shoulder, head, and your shoulder over here. So again, that's a good pattern. It's a pattern that's replicated in past by gold, and we've had big breakouts from it. The measured move, again, from here to here, should replicate when it finally breaks out to the upside in the same amount. That's another measured move technique that I use. It basically puts us just above 2,500. Now, when does that happen? Like, is it a quick move or not? The only thing we can do is we can look at history for a guide. History, like, I don't know how many of you guys are a history buff, but the one thing I think history is great for is learning about human nature and potentially avoiding or learning from the past mistakes, right? Learn from past mistakes to avoid future mistakes. And so in this case, what we can do is we look at gold's chart here, and we see that we did have a breakout here. Let me draw this trend line. Very similar. We were kind of hammering on this level over and over again, and we broke out, right? We broke out here, right? Hammer, 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 breakout, and it basically took a year to make that move up. So again, right to here, right up there. So that would generally be, you would say about a year out from the breakout is when we might make that high at 2,500. So again, whenever that happens, if it's in a month, if it's in 2 months, if it's in a week, you look about 12, maybe 14 months out for that target. Quickly looking at silver here, guys. Silver again continues to chop. This is the weekly chart. I'm more paying attention to the weekly chart because it just gives us a basis here. We have downside here, we have upside resistance here, so support, resistance, and we're just continuing to chop sideways. Eventually, I think this breaks out, but remember, as an industrial metal, if we start to see a slowing economy, there may be additional pressure on silver versus gold. Gold continues to be my pure play. Quickly looking at platinum, I saw someone asking for that chart as well, so I can cover that real quick. Not a whole lot to talk about on platinum. Very, very similar to silver. Notice the wedge pattern. Notice the same consolidation. Same thing. Eventually, I do think this breaks out on future printing of money, of the dollar continuing eventually to slowly degrade. But again, right now, you're stuck in this wedge pattern. You have your support. You have your resistance. Watch for which way breaks. That'll be the next significant move. Next up, let's take a look at the oil chart. This has been one of the purest plays, guys, I've given, right? So we very clearly had the inverse head and shoulders, right? Inverse, shoulder, head, shoulder. When it broke above here, I said it was triggered. You know, I don't know how many of you guys potentially took this long trade, but it is marching very slowly for oil, but it is just marching higher here towards that target. Again, if we do a measured move from this low to there, and then we replicate that same distance out, it gives us an approximate target in the low $80 level. 80 to 83 is my general target here before I think this runs into resistance. Now, would I be a buyer here after this move up? The answer is heck no. You know, I don't care if it goes to 80 or 82 or 83. I'm still not chasing. If you didn't buy it on the breakout right here on that first daily close, which is where it triggers, that was at $73, right? You're now up $3.50. I just don't chase. Now, does that mean I maybe miss out? Sure, it does, but it also protects my downside, and that's really, really important. All right. Lastly, let's just quickly go into the chart of natural gas. Natural gas has had a two-day beautiful move. This morning, really early, natural gas was popping even more. It has stalled out here. Yesterday, I did take half my position off the UNG when it was right at the highs here, right? I didn't get the early morning highs today, but it has reversed. But essentially what I do here is I manage these positions. So with the Verified Investing Alerts group, we took half off yesterday for a little bit of a gain. I'm keeping the other half if it continues to run, but by exiting half, what that enables me to do is if it drops back down, I can rebuy, get a better overall average, and then look for that pop. So it essentially gives me more maneuverability, which as an investor and trader is of the utmost importance. So I think that's really a key point here. So just to be full and fair disclosure, I did take half off yesterday right at that close. It popped up a little bit more. Now it's pulling back. Hopefully it just goes straight up. I mean, that's what I'd prefer with the other half of the position. But the idea is, again, be maneuverable. Be able to maneuver. And if it does pull back, it gives me the opportunity to rebuy what I unloaded at a small profit. That's the key. All right, guys, back to center screen. As always, you guys continue to rock. I hope you find these things useful, the game plans. As always, guys, check me out at In the Money Stocks, which is soon merging into verifiedinvesting.com with a new website that is going to be spectacular. I hope everyone, again, is just, swallowing and enjoying all the education here. I really want to bring that to you guys. The comments that you guys leave on Twitter and YouTube, they do make me drive forward and want to help you guys more and more and just give out more information. So thank you again, guys. I will see you tomorrow. Tomorrow's Friday. Let's see what we have. PCE indicator. Have a good one, guys. Take care.